Hey friends, and welcome to Technical Shots by LG. In today's session, we will learn more about the flag patterns, as in the bearish flag pattern and the bullish flag pattern. Before that, let's understand what are chart patterns. Chart patterns are structures which are formed due to price action behavior exhibited by like-minded traders. So this is the definition of a chart pattern, but let me give you or let me summarize the video on the bearish and the bullish flag pattern, and then we will understand this definition through this video, what this definition exactly mean. So once we finish this video, I think we should be able to get a grip on what the definition of a chart pattern is, or how the chart patterns actually behave. So let's start with our chart pattern, which is the flag chart pattern. Now let me start with the bearish flag pattern. So these bearish and the bullish flag pattern behave exactly the same but in a different direction. So if it is a bearish pattern, it will have a bearish move. It is a bullish flag pattern, it will have a bullish move. So let's start with the bearish flag pattern. So the flag pattern basically consists of two components. One is the flagpole and one is the flag. So let's draw a flag pattern, which a bearish flag pattern here. So this is a swift down move. Then we have a consolidation phase, and then we have a breakdown here. So this is a bearish flag pattern. So in this flag pattern, you can see the sharp move, which is called as the flagpole, and then you have the flag, which is the consolidation phase. And then once the flag consolidates, it usually breakdowns in the same direction of the sharp move, and hence it is called as the continuation pattern. So it will continue in the direction of the initial sharp move. Now let me draw some trend lines here. So this is one trend line, which is the lower trend line, and this is another trend line here, which is the upper trend line. Now the upper trend line actually acts as a resistance, and the lower acts as a support for this consolidation zone. And when this particular breakdown happens, we see the support has been broken, and the price action actually moves rapidly towards the downside. Now, how do we identify what could be the down move once the flag is broken? So usually the technical says that the length of the down move from the breakdown would be the length of the pole. So that is the sharp up move. So let me just go and get the price range here, and if I take it here, and then so technically this is our move here. So again, it won't be a straight line, it will consolidate somewhere here and come down here, and it will, end of the day, it will come here to this level. So this is the target as per the technicals. Now what is the stop loss? Now stop loss has to be somewhere around here, just above the upper trend line, which is acting as a resistance. So now if I take a short position here, I would go to the short position and just place my trade here. The target will be, as we discussed, the length of the pole, and the stop loss will be just above the resistance. There you go. So that would be our trade, and this is how a bearish flag pattern looks like. Now if I go for the bullish flag pattern, it's going to be exactly the same but in reverse direction. So if we have a sharp move, then we have the consolidation phase. Once the flag consolidates, it will potentially break in the upside. So these are the trend lines, which is the upper trend line acting as a resistance, the lower trend line acting as a support. The entry to the trade will be just here at the retest, and the stop loss will be at here. So let me just take a long trade here. So I will be entering long here, stop loss will be just below here, and the target will be as per the length of the pole. So let us get the length of the pole using the price range. This is the length of the pole, and if I mark it here, roughly around here. So this is the length of the board. So this is going to be the bullish flag move, and this is going to be the bearish flag move. So accordingly, you can take a trade. Now, one thing we should understand as traders, that when we say a bearish flag pattern, the move is on the downside. Can the move go on the upside? Very well, yes. So these patterns basically give us an edge to trade. So they will give us a edge, as in the probability of the price action moving in this direction, in the downward direction for a bearish flag, will be more than the probability of the price action moving in the upper direction. That does not say that it will always move in the direction. It can go in the upper direction as well, hence the stop loss. So if the price action goes in opposite direction to our trade, we have our stop loss, which will execute and cut our trade. So we come out of the trade with a very good risk management. So one thing we have to understand, that risk management in trading is really important, and so is the stop loss, because trading is based on the probability. We cannot say that, if there's a bullish chart pattern, the price will always go down. It is not mandatory the price will go always downside. It can go upside, but the chart patterns give us an edge, as in the probability of the price going downside is more than the probability of the price going upside. So this is what I was trying to explain, how the chart patterns, or how the flag chart pattern works. And if you go back to the definition, the price action behavior exhibited by the like-minded traders, this is what it is explaining. So all the like-minded traders will enter here. So once the like-minded traders enter a short position, then eventually, because most of the traders are short based on the chart pattern, the price will eventually come down. But that, again, as I said, that doesn't mean it will always come down. It can, it can go up as well. Hence we have stop loss as part of our risk management. So this is the chart patterns, as in the bearish chart pattern, the bullish chart pattern. Now let's see live on a chart how the pattern looks like, and how does it actually perform, or does it perform as what we discussed here. So let me get rid of these drawings here. Okay, now we have the chart of gold here, and let me see if I can see a pattern here. Let me see if I can see a pattern here. So let me see. Okay, I can see a chart pattern, bearish flag pattern here. So let me do a replay here, and okay, yes, do a replay, get it here. So if you can see, you see the price moving in a sharp down move here, okay, and then you can see it's getting consolidation, or the price getting consolidated here. So let us just play candle by candle. There you go. So you see, let me just draw the trend lines here so you'll understand what I'm trying to do here. So this is the lower trend line, this is the higher trend line. So the higher trend line is acting as resistance, and the lower is acting as support. So let's wait for a breakdown, and then we can enter our positions. Now this is a bearish flag, so we'll enter in a short position. So let's see the next candle. Still good, still good. Okay, let me just increase the flag. Okay, there you go. That's the breakdown candle. Now let me enter the short position here, and this is my short position. Just on the retest of the candle. and what will be my potential move, down move here. So if I take a price range, it will be roughly from the roughly around the size of the flagpole. So roughly here, and I will mark it this as my target. And what is my stop loss? Stop loss is just above the red line. You can see, there is a rejection here as well. So we'll just place it on top, which is, yeah, this is fine. So if you look at this trade is actually a good trade. It's a risk reward of 1:4. Okay. Now let's do a replay candle by candle. Okay, so that's fine. Okay, we entered. The trade has been triggered on the retest. Now let's go and see what happens. So here we go, going as per the trade. Nice. Okay, that's a very confirmation big candle. Not a confirmation, but it's a confirmation that the trade is going in our direction. That's nice. Oh, it's a green candle. Okay, that's fine. Let's see. Still looking good. Still looking good. So see here, I'll show you something very interesting. Now if you look at it, now this is sort of a resistance zone. So if I take a horizontal line, you can look, this has been the resistance zone now. So you can actually move your stop loss here and take profits from here if the price hits here. But let's assume this is our trade, and let's move in the play the replay, and there you go, we won our trade. So this was a very good example on the live charts of gold. So pretty much the flag patterns are very important patterns, as they give you the continuation a move as what next is going to happen based on the initial move. So in this case, because it's a bearish flag pattern, it gave us a bearish down move here. So yeah, so that's it from my side. I've pretty much tried to cover as much as I can. If you find this video helpful, please share and subscribe to the channel. Thank you very much.